Hey everybody, welcome to Mortgage Today for Friday, November 3rd, 2023, and oh, what a day it was. UMBS were up 44 basis points bright and early this morning. Bonds were only modestly stronger in the overnight session, but we're adding to gains after the jobs report. While this is technically a miss, it isn't a huge miss, so it remains to be seen what kind of legs the rally really has. Non-farm payrolls came in at 150,000 on 180,000 forecast. It was 297,000 last time around. Unemployment rate came in at 3.9 on a 3.8 forecast. Earnings came in up 0.2 on a 0.3 forecast, as 0.3 previously. Netting out all of the revisions and everything, non-farm payrolls are up about 101,000 from the prior 2 months. Overall, this report shows the Fed tightening is gaining some traction. The markets are definitely in a bad news is good news mode. The 10-year and 2-year bond yields dropped by 12 basis points on the report, and the Fed Fund futures dropped the December rate hike probability down to 10% and bumped up the chance of a rate cut in March to 21%. Don't agree with that second part at all. The services economy expanded in October, albeit at a slower pace than September, with the ISM report falling from 53.6 to 51.8. Production and employment fell, although some services reported that labor costs remain an issue. Pricing pressures remain elevated, although the pressure does appear to be easing. Strikes are having an effect on labor costs overall. Stock futures rose and bond yields fell after signs of a labor market slowdown bolstered the speculation the Federal Reserve is done with its interest rate hikes. S&P futures signaled the equities will gain a fifth straight day. The gauge is currently on pace for the best week since November. For the last couple days, the bond market moves seem to be outsized relative to the potential drivers. Does that mean that we are possibly seeing a top or just wacky trading? It's hard to tell, given the immense gains in bonds this week and the surprisingly robust translation to rate sheets. It's hard to advise against taking some of the chips off the table, but Friday's weak jobs report and strong bond market reaction raise bigger questions to answer. Granted, it is very nice to answer the question of whether the gains over the past 2 days were justified, but now we have to wonder if this entire week is enough to inform a long-term rate ceiling. Using our own advice about needing to see 2 to 3 months of similar data before drawing to those conclusions, clearly this is not enough information. If we could know that the next 2 rounds of big ticket data would be similarly cool, the top is in for rates, but that is a big if. UMBS ended the day up 52 basis points at 100.84, which is actually down 14 basis points from the best of the day. 10 years sunk a little lower to 4.577, thankfully. We needed that, but at 100.84 on the MBS, that's actually putting us back up into these charts, so we actually have some technicals, although with a whole bulk of the trading being well below technicals, I don't know how much they mean at this point, but at least we are in between that 100-day moving average and the 50-day moving average, with the 25-day moving average below it. We also always cry the term follow the money. Blackstone Real Estate Investment Trust investors sought to pull $2.2 billion out last month compared to $2.1 billion in September. BREIT returned about $1.3 billion to investors, or about 56% of what was requested, the highest payout percentage since redemptions were restricted last year. The real estate trust is a colossus in U.S. property markets, with its reach spanning from apartments to data centers. In late 2022, Bright curbed withdrawals after redemption requests picked up and its wealthy clients became jittery about having money locked in commercial real estate. We also got news that Rocket Companies, under leadership of its new CEO, reported a net income of $115 million in the third quarter. This marks a decrease from $139 billion the previous quarter, but an improvement of $96 million from the same period last year. Looking at the economic calendar next week, not a ton on there. Wednesday, we'll get some wholesale inventories and a 10-year auction. On Thursday, we get jobless claims, which are always important lately, and consumer sentiment on Friday. So everything in the market is not within our control, but our brain is. So check out our sponsor at wellthatmakesense.com, plus our common influences. Over there at wellthatmakesense.com, there is a great series going on in the book, The Slight Edge. Whatever you have set your goals to be, The Slight Edge has tools to help you get there, so check it out.